I would probably invest in, I'll give you a couple of words. It will have to be boutique. It will have to be innovative. It will have to be probably mixed use, as I said earlier. And I'd probably tag along on one of the main investment vehicles around. If I would do it myself as an entrepreneur, I wouldn't know. There are various spaces where I would tag on to someone else. Keith, I might want to invest in one of your funds.
Keith, you've now got 2 lots of 500 million. So that's
I've got $1 million now. Thank you. Obviously, there's a lot of different pockets. The markets are tight right now. I think as a general theme, we're still pretty long on Spain, the resort market. But I think from a balanced approach, some of the urban markets still are well behind, previous, peak RevPAR, EBITDA. So there's still a lot of pickup in those areas. So I would say probably a balanced approach to Spain. But actually, I would have more resort allocation than urban. And I think you've got plenty of liquidity within that, whether to public markets, institutional, etc., as you reposition the assets and grow the EBITDA. Some of the mixed-use projects that we talked about earlier is definitely an area that we're looking at within cities with certain characteristics, right, that have a technology, that have an entrepreneur hub, that have a culture, that have tourism, that have, so that within certain cities, those larger projects we think are really interesting, and ideally conversion of existing historical buildings that are large, but if not, obviously ground up. But I do have a preference for using existing historical buildings.
Yep.
And then platforms. I think platforms, whether it's in an area that Andreas was mentioning earlier, within the limited service to budget kind of branded space in terms of franchisee, operating platform. I think there's definitely a lot of space for growth in there. Although there are a couple of platforms in the market right now, but pricing is looking pretty tough. So that just might be priced out of private equity returns at the moment. We're monitoring that space, but I think platforms are important as the market is shifting away from the traditional either lease or management contract into a franchisee, into controlling your operating framework around the real estate that you own. I think having access to or controlling platforms is another way to increase value of your real estate. But also, if you sell a portfolio nowadays, and it changes with the cycle, you can get an additional 1 or 2 multiple on your platform sale because it comes with the platform. So there's something to be said for that.
Good, thank you. Eric, 500 million, and if it's a good answer, you might even get some of Dirk's money. We'll see.
All right. Well, I would definitely follow kind of the strategy of backing a innovative concept that is aiming at the kind of more younger segment of the market. I think there's a tremendous branding opportunity in that sector across the world, really. I mean, again, if I look at kind of the branded limited service or the kind of multi-sharing, if you look at kind of the branding, you're talking sub 5% in many parts of the world, which I think has a massive opportunity.
Great, Andreas.
Yeah, I would split it in 4 parts. Basically, the first one in one product, as Eric has just pointed out, hotel is offering a very personal experience, which is giving a certain cocooning and that you feel home experience. So that'll be the first one. Then the second one could be a combination, as said before, in the US, where RevPARs at the moment are declining. For long-term investment, it's a great move to really get into a very good one-way location. Then secondary, the third part would be regional UK. It may be speculative at this moment, so you don't know where it takes us with Brexit, but still would be happy to believe in the market and see that everything goes very, very fine here. I very much hope so, and so therefore I'll be happy to put the third part on it. And the fourth one I'll put on the German coasts, which are extremely in demand at the moment, in particular by domestic travelers who are just getting away from Turkey, for instance, and other markets which are a bit more under pressure at the moment. And there is a clear lack of branded hotels. There is nearly none, and definitely a great demand. And if you don't book before Christmas, you don't get your holiday ready for the next summer.
Okay, good. Jochen?
No ideas left for me. I would do the following. I think the European market is characterized by real estate markets which are very ancient, old, and the city centers are therefore very difficult to penetrate, but highly valuable because irreplaceable. So I would try to focus on finding conversion plays in the very heart of European towns and major cities. I don't know, the top 20. And I would then attempt, as I said earlier, I would apply some value-add strategy, because in today's market, unless you create significant value at the asset level, it's going to be difficult to get superior returns. And then my attempt would be, you see, so real estate, ancient real estate markets, very condensed city centers is a European aspect. Another aspect of Europe is high labor costs. So whatever concept you have to take out as much labor cost and as much risk out of this. And at the same time have a good compelling market product. So therefore I would go after service departments, 4-star service departments, where you basically strip out all the F&B other than breakfast. And so in those old buildings, you take out the labor cost risk, which will increase your GOP to over 50%. I would do that with a couple of the well-established branded operators, because in Europe branding is very low still in most countries, half of what it is in the US, and do that.
If you could join me in thanking the panel, especially loudly.